following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate your growl and a problem with us out here. We have the Dow Industrials up 400, Nasdaq up 88, S&P's up 38. Gold contract down a buck, $16.43 an ounce. You got silver flat, $17.09 an ounce. Light sweet crude up 75 cents, $47.93 a barrel. Notes and bonds, just they're taking whatever kind of energy they have, folks. Let me tell you something. This is a straight line move to zero. You get the 10-year up 17 ticks right now, 136.17. The 30-year up 22 at 174, and you got the 10-year hit 0.92 or 1%. Right now we're at 0.95. King dollar up 364 ticks, trading 97.517. Euros at 111. Yen is at 107, and the pound is at 128 to 1 U.S. dollar. Hold on for the ride, Tom O'Brien.
That's right. Both directions. We don't know which one's going to be the end, but man, we got volatility. It's remarkable, these moves.
No doubt. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, defined risk, in quotes, okay? Great program, 11 to 12 every trading day. If you haven't test-driven yet the Thinkorswim platform, great time to do it. You're on our website. Hit the banner. Bring it up to allow you to trade paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, there's sometimes where you think the market may go up, sometimes where it may go down, but the only thing you can guarantee right now, it's going to go.
That's right. I agree.
Direction. I don't know which way, but it's going to go.
It is.
So, and sometimes that's enough. You know, if you can plan for volatility and movement, that might be enough in this environment.
No, listen,
yeah, go ahead, Tom.
No, I think it's so great because what ends up happening, if you're trading, folks, bulls and bears could make money yesterday. That's how this shakes out. That you know, what Kevin's talking about, you put a strategy on, and guess what? Each bull and bear had a huge opportunity to make money, not a small one. I mean, because in high volatility, you can really make mistakes as long as it comes back the other way, right?
Yeah. Boeing, you know, let's just take the Dow stock Boeing.
Yes.
Since it has now had about an $8 range since it opened. 5 higher, 5.5 higher, 2.5 lower on the day-to-day. I mean, both.
Right.
You know, bullish, bearish, you can both be profitable.
Yep.
If you're planning for movement.
Right.
And it's so important that you can say that, you know, take a name and plug it in there. They're all moving, and that's what you got to plan for.
There's no doubt. So as we're speaking here, this is going to be interesting, Kevin. Just coming across the tape, Bloomberg just suspended his presidential campaign. So
yeah, that was not really shocking after $500 million.
I know, man.
And you got almost nothing.
Imagine that, $500 million. Holy cow. That's crazy.
Yeah.
Imagine what we could have done with that if we were trading, Kevin. Ooh.
Yeah. I could have turned $500 million into $400 million. No. But yeah, you know, hey, listen. For all he spent, that was just a strategy for getting into the presidential race that was not a good strategy.
In the mix, yeah, no doubt. And that's like for how much he has, that's like spending, I don't know, maybe it's $100 for us or $1,000. I'm not quite sure, but it's certainly not, you know. Yeah.
I was ready to join. It's less than 1%. He's $60 billion, right? So $600 million would be 1%. So if you're a millionaire that's spending $1,000, you know, he'll be okay, right?
Yeah.
Tommy, think about this. You know what he spent? Interest.
Exactly.
He spent a little interest.
Interest literally for the 2 or 3 months that he ran, which is remarkable.
Exactly. So no tag days for him yet, but I don't think that was a very good strategy that he had.
Yeah, there's no doubt. So what are we going to be looking at today, Kevin?
You know, picking out stocks and trading individual stocks today in these markets gets a little tricky. So we're going to cover the NASDAQ,
Okay.
the NDX, and their futures and how that moves. Because, you know, you do a disservice when you think about one stock today. But we're also going to look at Kroger, that has earnings after the bell. And as you know, Warren Buffett is now involved in Kroger. So we're going to cover that in the second half of the show. But the first half of the show, we're just going to focus on the NASDAQ, which is so heavily influenced, as you know, by the FANG stock and the FANG Plus. So that, without a doubt, has the highest beta of any of the indices trading right now. It moves the biggest percentages, both up and down. So we're going to have a discussion on the NASDAQ today in the first section. And then the second section, we'll go through with Lightfolio and talk about Kroger, which has earnings after the bell today.
Nice. And, you know, when you do look at the markets, folks, what ended up happening is that when we pull back, the NDX 100 and the NASDAQ Composite, strongest by far. And that only did a 0.382 retracement off of the lows of December of 2018. The S&P did a 5.0 pullback. The Dow did a 0.618. So you can see, I mean, it's glaring that as we get back on track, it's the NDX 100 and the NASDAQ Composite that still has the juice. You know, I mean, it's...
That'll lead the way, right?
Yeah.
Exactly right.
Yeah.
A lot of tech. You know, all you got to do, hit up the Thinkorswim platform and hit up the heat map.
Yes.
And look at the breakdown of the NASDAQ 100, and you see it's very tech heavy, and you see the names in there, and you realize why it's such a mover. So we're going to focus on how to trade these bigger indices. You know, maybe this isn't the right environment to be a stock picker, although everything is moving right now, frankly.
Well, you know, it gets interesting, too, that I think that, you know, inside the equity market as well as the options, what happens, folks, is that you have to understand that in a fast market like this, you want to do strategies. Well, you want to do a strategy. But even when you're putting the bids and offers in, you want to put them away from the market. Because,
right.
I mean, the reality is, what I love about these markets, Kevin, is this. Is if you, and I saw what you guys did. You had put one of those call and that iron condor way away, right? But the bottom line, it ended up getting hit because the market's so fast, folks, that what you'd like to do is that your probability goes up much faster if you're away from the market and you get that spike, and you might get it. That's the real bottom line, you know?
Yeah, and what we think about, Tom, think about this. An iron condor gets more expensive as volatility expands. It would get cheaper as volatility came down. So why not?
Right.
Sell that iron condor into the expansion of implied volatility. Leave it a little above the market and see if implied volatility expands into your offer.
I love markets like this because you can do that. You know what I mean? Because other than that, folks, the computers are running everything, but they're not. They're trying to run things now, but guess what? It's too volatile. So it's pretty cool, man. And the aspect of putting them away, and then, you know, bottom line, when you're getting out, just make sure that you keep a limit in there to get out, because you don't want a market order.
Tom, you know that I work with my daughter. I told her these are the days that Dad came home in a good mood. You didn't know why, honey.
Totally. I love it. 45 minutes from now, folks. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Thank you. Tommy and
Thanks,
I come
Kevin.
right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up 597. You get the Nasdaq up 161. S&P's up 65. So this is going to be this race is really boiling up now, right? Oh, and there he not only just suspended his campaign, he just endorsed Biden. Are you there, Tom? I can't hear. Oh, I'm sure he'll come back. Let's see what they say. Yeah, the bottom line is that now he's gonna throw his money behind Biden, and Biden definitely needs his money. That's the real bottom line. Let's go take a look at the some of the. Well, actually, let's go over to the S&P first, because what you have out here, high volatility, no doubt. What we're doing right now is that we're climbing up to the this morning's high. High this morning 3,074. Right now you're at 3,062, and the challenge is going to be to get over this 3,070. We're right next to it right now at 3,064. Some of the higher volume equities out here, if we take a look at the marketplace, you got Bank of America is that's flat. You got Advanced Micro up $1.30. Apple's up $8. Look at that hit. Apple's up $8. That's something else, man. Let's look at this. This thing runs around $8 like.
Testing 1, 2.
I got you. You're testing all right, man.
I can hear you. Everything was fine. Either way, technology, man, maybe they just can't keep up when the market's moving. I was just saying, in terms of quite a move if he endorsed Biden. The suspension of the campaign, not surprising if you looked at the numbers, but right. Biden really got his ducks in order, man. I mean, remarkable turnaround in the span since Saturday.
Isn't it? It really is. And, you know, the bottom line is that Biden needs that money because he said he's going to put $1 billion into it, whatever it takes. So he needs that $500 million. Because Bernie, no doubt, has a money machine going in a huge way. So
you know, last night, I mean, from what they're saying, just watching the news a little bit, in terms of the numbers coming out, the real goal was for Bernie to come out with almost like a 200 delegate lead last night, to be able to weather the storm if Biden was able to catch some states from here on out that he might have an advantage in. And it actually turned out that Biden ends up with the lead.
Yeah. That's really surprising. I know. I heard it on the way in this morning, right? That you know, it's like, wow, okay, that's really a turnaround. How about he beat Elizabeth Warren in Massachusetts.
Yeah, and that's where hopefully you see her drop out immediately as well, and I think you will, because it's just so dramatic at this point. If you can't win Massachusetts, where you're
Seriously, man.
an elected citizen, why would you ever think? And she actually came in third.
Right.
So yeah,
Pretty wild. 877-927-6648. So market-wise, in general, folks. Okay, let's take a look at yesterday. So what we had out here yesterday is pretty cool to basically at least try to get a little bounce going. And what it was is that we had the SPY come down into the highs of the lows of last Friday. That number is 297.89. We, bottom line, we got to 297.57 and rejected lower price at that particular point. So it's going to be intriguing watching how this shakes out. Now, what didn't happen, which would have been really cool if it did, if you are looking for a, basically a real good bounce, is the aspect of the NDX 100, and it didn't make it. We got to 207.62. I would have loved to see it get to 207.17. So the danger point there, folks, is that, my take is that the high or the low is going to get tested. So it is what it is. We got oil, right, Tom?
we sure do. So
let me put
we
that
had
whisper
oil
number
EIA.
up. Yeah, go ahead.
EIA numbers in like 7 minutes from right now. So crude trading at about 48.12. I get the contract up there, the April contract. Could you maybe pull up the whisper number
Yes.
and see where we're looking in terms of what the expectation is going to be for that crude number at 10:30? And then we'll go over what kind of volatility we have priced in there.
Okay, so the whisper number is a draw of 583,000.
You know what? You have Cushing selected there. Number 30. Just
sorry.
read it.
There we go. Oh, that's a big difference. Well, yeah,
There
we
we
have
go.
a build. So the whisper number is a build of 1.5 million. The survey number is a build of 3 million.
Okay. You want to make an entry? You got
Yeah.
less than 2 minutes. What are you going to go for?
Let's see.
And as we say that, man, I'll pull up the chart. We're getting a pop. We just popped 30 cents in the price of crude. I wonder what the markets are doing as that's happening.
Let's see. CL, I got to look at this contract for a second. Okay. CL, all right. CL.
Man, something's going on with crude ahead of these numbers. Remarkable. We just moved up 35 pennies since the 10:20 a.m. bar started and we started talking about this.
Really interesting.
Yeah.
Okay. So 364. I better hurry up here. Let's see. 364. Okay, so I'm going to go with the build of like 4 million.
Okay, nobody could see your chart or what you were doing or what happened there.
Oh.
Right?
I don't know. It looks like they can. They should have.
No, I can see it now, but okay. We've been looking at the Cushing screen the whole time, so I'm just not sure what, or the crude chart, the inventory chart. We've been looking at the whisper number the whole time.
Okay. It's in there now, so let's see. Oh, I see what you're saying. You mean that, yeah, I had to bring it up in the other
I mean, everybody else, yeah right.
This is a delayed quote anyway, though. Why don't you bring up the other platform, right?
Okay, I was just saying you went for 4, but we couldn't see your chart. Why you went for 4, a bigger build or any?
Because if you're looking at this chart, what happened is that we're going up to the highs of yesterday, but the juice isn't behind the move, so we'll see how that shakes
So
out.
you're looking for lower. That's all. I just
am.
wanted to come
I
along
am.
myself. You took
Yeah.
a look at the chart on the other screen, right? And so we couldn't see it. That's all. So 48.18. Is this a 5-minute? 5-minute bars we're looking at. We get the numbers in exactly 5 minutes. I mean, check out this 5-minute bar that we just had, though,
Yeah.
from 48.03. When I pulled these up, we made it up to 48.37. I thought the market did trade up a bit over that time, right? But not quite a 40-cent pop. But nonetheless, here are the contracts at $48. We'll just go over the daily ones because you have exposure from 48. Now, we're 17 pennies away from that price level. Here's your bullish spread on the right, 48 to 51. They got some premium priced in, as you may expect, man.
Yeah.
62 cents. Now, 15 of that intrinsic value, right? So that's going to be your expensive spread because you're in the money. You go over to the bearish side where you're out of the money. You're going to be looking at $43, that the difference being the intrinsic value there. So you're buying it, I get 61, you're selling it for 44, $105. So you need $1.05 of movement by 2:30 to break even if you're just trading both sides of that contract. You have a 15-cent start to the head start to the upside. A lot of volatility, as you may expect, right?
Oh, yeah. Big time.
More than $1 a movement. You could make that trade. You could end up $1 away from $48 by 2:30, and you're going to lose money.
Wow. That's crazy. Yeah. So that doesn't line up. Yeah, no doubt.
Yeah.
No doubt. And, you know, the market itself, we're reaching up into the highs right now. So the highs of last night inside this S&P was 3,074. You're at 3,069. The spike high from this morning at the open was at right where we're at, actually, while we were at 3,070.
It's remarkable, man. Just from the open, down 1.3%, up 1.3%. Like you're saying, I mean, possibilities of making money on both sides, man. When you get more than 1% in each direction, and we're not even 60 minutes into trading.
Gotta love it. Stay right there, folks. Tommy and I come right back with those oil numbers for you.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Maybe someone got that news a little bit early, Tom. Yeah, crude inventories rose only 784,000 barrels.
Okay, so they were looking for between 1.5 and 3 million, right? So you just get a rise of 784. I got the chart up here. Pretty muted action, though,
really?
on that type.
Oh, my God.
48.25. Again, we were trading, I mean, that 5-minute bar when we were coming into the news went from 48 basically to 48.37. We're just right in the middle of that bar right now, kind of right where we've been trading at since about 7:30 a.m. this morning, jumping around from just under 48 bucks. We're now at 48.26, so a little bit of a pop. But again, I mean, if you're making that trade today, you're probably making that trade on some volatility having to do with the coronavirus, not really the market dictating in terms of those inventory levels. I imagine that's going to become more important as time goes on. We got that ADP. Did you see the jobs number? 183,000 for private payrolls. The market was looking for 155 in February.
Right.
February, though, not really a month. I mean, just last week was the first time it really started to come to fruition that it might hit the U.S. So I'd be much more interested, even we get non-farm payrolls on Friday, much more interested what's going to happen in the March numbers and April as opposed to January and February. But January revised from 291 to 209. So you lost 82,000 jobs in January from what we thought. And even though you beat by almost 30,000 in February.
Yeah, there's no doubt. Those are good job numbers, you know. But as you just said, guess what? This thing really just raised its head, you know, what?
Yeah, February 1st, let alone the first week or two of February at least, hiring in the U.S., be hard-pressed to see how that was affected by the headlines of the coronavirus in China in the beginning of February at all, if not even still at the end, not quite decision-making coming into play yet.
Oh, there's no doubt.
Yeah.
So we got to go over, at least do the 10-year once, folks, okay?
Oh, boy.
Because, you know, my take is we're going to get an ABC structured, you know, up on price, down on yield. And, you know, as I said, these are, you know, straight line moves. But I'll tell you, man, this is really a straight line move, okay? Just to put things in context. So look at this. I was talking with our man, Mr. Bud Spriggs, this morning, right, Tom?
Okay.
And, you know, of course, he's in the mortgage business, folks. And we were talking about the 10-year. Now, look at this move in the 10-year.
Yeah.
On February 12th, it was at 1.63.
Yep.
And we're live right now at 0.97 or 0.98. It's just fluctuating around there. It's unbelievable, man. I mean,
not to mention we started the year at 2%. We just made it 2 months into the year. We went from 2 to 0.9.
Right. And there's nothing that's going to stop it. Well, there's not any. We know we're in the speculation business, but it doesn't look like there's anything to stop it from going down to zero. You know, if we go into the Fed fund futures, you're going to see even after the fact that the Fed came down, I mean, 0.5 point. The March meeting, let's see, so we're at 1.25 right now as the rate. So March, I still have a hard time reading this thing, actually.
I do, too. I'm going to have to dig into that. I said I'm going to be
We're
next to you in the studio tomorrow. Maybe we'll play with it. I know it's tough when they change around a function as important as that function, and it's not easily.
Because on Bloomberg this morning, they were saying that 2 cuts a game for the rest of the year, but not necessarily March. If you want a statistic, folks, listen to this one, man. This is crazy. This is the lowest rate in 150 years. That's what they reported on Bloomberg today. 150 years. Like,
I'd believe it. We don't know zero.
No, for sure.
We're
I'm just saying,
0 and 1, right?
Right.
You better believe it. Yeah.
And of course, you know, they've been dealing with negative rates for a long time in Europe, and you know, I wish someone could figure this out because it's still hard to. Bud was saying to me this morning, right?
Yes.
So picture this, folks. I'm explaining that you give the government $100,000, and 10 years from then, at a negative rate, you're going to get back $99,500. Like, when you explain that to people, it's like, what is your problem, man? I mean, there's something wrong with you.
I agree. I totally agree, man.
Unreal.
Yeah.
So
because I mean, just everything you learn in school, right? Is the whole point of saving is to consume more later. I mean, to get into like the economics of things, like you're incentivized to save money because everybody wants instant gratification, all right? I mean, economics is built off really human behavior, right? You know, I mean, what are you going to do when prices go down, when there's less supply, when there's a certain amount of demand? How do the human interactions play into that? Well, if you have less supply, people are going to be willing to pay more for that product. You know, if you have $10,000, do you want the instant gratification of consuming $10,000 worth of goods today? or do you want to save, forego that instant gratification, and be able to consume $10,500 worth of goods in a period of time? How do you teach that when you have to replace it with, do you want to consume $10,000 today or wait? And if you wait, you get to consume $9,000 worth of goods in a year.
Seriously.
Just to put it, it's crazy.
It really is. We take a look at let's go inside the Dow Industrials and see the strength versus the weakness inside the Dow. United Health, I know, is up big. Yeah, there it is. That's up 9%. Oh, my God. So that's putting 170 points into the Dow. Apple's putting 48, Home Depot 46, American Express 30. Only two Dow stocks that are in the negative right now is that you have J.P. Morgan putting minus one. Big deal, right? That's nothing.
If you could right-click and get rid of that blue so we can see a little more of that too, please. Thanks.
So let's go look at United Health. This, of course, is that because, Biden, I suspect, is there. Now he can give Bernie a run for his money. So that thing.
Okay.
Yeah, that thing got a big pop. It was as high as 295, right? 286. So that no doubt is a big number. Inside the NDX 100, the strength versus the weakness out here. You get JD.com up 6.4%, big number. Take-Two up 5. NetEase up 4.2. Now, we have to go over the Asia because two of those are Asian stocks.
JD is cool. Right.
Airlines still taking it on the chin. You got United down 1.2. Lululemon, I don't know why that's down, but that's down 1%. Expedia and Marriott. Oh, man, these...
Hey, how about, can we go over to JWN, Nordstrom? They had their numbers this morning, trading lower. I talked about it in the morning market kickoff. Let me even pull up exactly what they were. Nordstrom shares, maybe I got them. I don't have them in front of me. I think they missed a bit.
They're trading $31.99. Let's see what they say here. So we got, so they see the year, they brought the year down. The estimate had been 349. Now they're at 325 to 350.
Okay, yeah.
Revenue, the estimate had been 4.53. Now they're looking at 4.54. It's not bad. Gross margin is still laying out there at 35%.
Yeah, I mean, not bad numbers when I took a look at net sales to increase 1.5 to 2.5%. I mean, a decent company. We've talked about it with Kevin Hinks, right? Nordstrom Rack, and so forth, but it's a tough continuance, and they actually spiked down to $29.50 last night on those numbers. So,
and then look, the net sales are still plus 1.3%.
They just missed on earnings. I have on here in Thinkorswim. They were looking for 148, and they came in at $1.23. So this quarter especially missing on earnings, I guess, their big woe.
Stay right there, folks. Tommy and I come right back. Dow right now up 480, NASDAQ up 139, S&P's up 50. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. Investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 480, Nasdaq up 132, S&P's up 50. Let's go over to our man, Mr. Teddy Kegstad, as we do every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kegstad, you riding that wave?
Hey, how are you guys?
Doing great, man. Yourself?
You know, I'm doing pretty good. It's kind of a quiet day in the currencies today. Not like, well, since we talked last, it was quite the volatile period for sure.
Oh, there's no doubt, man. I mean, how about that move in the euro, huh?
Oh my gosh, that was the biggest move that we've seen in the euro, for like a week and a half. Just the volatility that happened intraday, let alone the full moves that it yielded.
So what do you think, like, when you're looking at this euro right now? I mean, is this thing game? It's a 115, 118, or what are you thinking?
Well, you know what? I mean, where the recent low is, that's been a very strong support area for the euro for a long time.
Yeah.
Now, what really surprised me was the Volcker-esque way of cutting interest rates yesterday.
Okay. Yeah.
So now the market, I think, is pretty much factored in the coronavirus, or is at least as far as the currencies, I think.
Okay.
I think the equity markets still have a little bit more to go as far as like the S&Ps and stuff like that, especially with the way the volatility looked yesterday.
Yes.
So, but like I look at the yen, for instance, like this market was in a very strong bull market for a very long time. And now, especially with what's going on and even with this interest rate cut, I don't understand how the yen isn't bouncing right now, So
right.
It's very odd to. Last week we talked about how there was a divergence, and we were starting to see that these counter trend moves were either going to follow through even more, like they did, or we start to see a little bit of a turn, which we didn't get. And now I think we're starting to come into that little area where the dollar weakness. I mean, I'm a dollar bear right now over the long term.
Yes.
But I think that dollar strength is still going to start to rear its head again over the next 2 weeks.
Yeah, this is a big failure on the yen. There's no doubt.
Right.
that spike. We were at 112. Not too long ago, man. I mean, it's like, okay, this thing looks like it's charging down to this 104 level. I mean, we're at 107 right now.
You remember when we talked last week, it was only halfway from where it is now from the low to the high.
Yes.
Or the most recent high. And we were talking about how if it does go, like I didn't think it was going to get as low as it did, but now it's confirmed lower move lows. So the long-term bull trend is definitely on a neutral call right now. And as far as like, I mean, you watch the gold market and you've seen what it's done over the last few days, especially, you know. And, I mean, especially with the way the equity markets are rocking. Like I said, the yen, it doesn't seem to be acting like it normally would be, you know, and especially in the wake of the central bank action, you know, it's really hard to put a beat on this one. You know, the other currency, you look at the Turkish lira, you had a nice little sell signal that came in. They had a nice little corrective move. You got the Canadian, US dollar, Canadian dollar. It looks like they're trying to have a little bit of a corrective move. So there's some weakness and strength that's starting to show versus the fundamental trade that we've seen going on for the past couple of weeks. But the US dollar yen is a total puzzler. I can't put a grip on it. I think that if you're an aggressive bear or bull, you got to just use today's low as your risk. Anything below it, I think you're going to keep on grinding, you know.
You know what's so interesting what you're saying there? And we were talking about this a few weeks ago, Teddy, you, I, and Tommy. And what it was is that was the first time that the yen, even when it was weaker, meaning higher in price, right? The gold market didn't react. And remember, I said, you know, it was like, oh, man, this is so strange, man, because what happens, folks, is that the yen almost runs the gold market. I mean, it's that dramatic, okay? And maybe that was one of the tales, do you know what I mean? That's like, okay, man, this is like crazy, man, okay? Because we were right up there. Normally, folks, that would happen. You know, and I guess I can make the case, okay, it was a delayed action because they whacked gold $100 on Friday, right?
Right. Yeah.
It's like, okay, man. Oh, you gotta love it, though. I'll tell you.
Well, you know, it's kind of funny, like you're drawing the correlation with which we both know how gold and yen are very interrelated.
Yes.
And I'm starting to think too is that it could be, you know, oil has taken quite the nice little sell-off over the past couple of weeks, and now is in a very nice area. So let's say that even with all the supply chain slowdowns and whatever, what have you, if production is slowing, and even if sales are slowing, but your costs are also diminishing at the same time, what is the severity of the whole situation? You know what I mean?
Right.
So, and I think that with the yen, you might be seeing the yen's strength because when oil is low, it's good for Japan because they don't have oil to begin with. They have to import it no matter what.
Sure.
You know, so, and especially, you know, if the corona stuff starts to really stabilize now over the next couple of weeks, you know, the numbers it's kind of weird. In certain places, it seems like they're stabilizing. In other places, they're not, you know. So we don't know what that impact is yet. But I think maybe for the Asian trade, the yen might start to be maybe it's a bull right now. I don't know. It's a really hard thing to gauge, especially with how gold's moving, you know.
Yeah, there's no doubt. You know, we just had those oil numbers, and one of our tigers in the den brought up a great point. And what it was, folks, is that yeah, the airlines are getting killed, you know, there's no doubt, but more people will probably jump in their car using gasoline. And it's so wild because last night I'm talking to one of my cousins, and, you know, he's going to get another one of my cousins. He says, what, you know, they're going to jump in their car and they're riding down here. They says, we're coming, man. And it's just so funny. But they're jumping in their car. Do you know what I'm saying?
Right.
So that's a phenomenon that we do want to pay attention to, folks. And, you know, millions of people jump in their cars, start using oil. Maybe, you know, oil can basically get stabilized here. You know, it's going to be interesting, man. There's no doubt.
Well, especially with the holidays coming up, you know, you got spring breaks and stuff like that. It will be interesting to see how those numbers start to pan out.
Yeah, spring break. I forgot about that. Spring break.
But with the European currencies, you know, it's pretty interesting how, you know, the dollar has been in a little bit of a retreat recently. The pound still just seems to be a sideways kind of grinding little bear, kind of, not really, but it just doesn't seem to want to get a rally. But it doesn't want to sell off either. You know, like when the euro was really stretching this through resistance over the past few sessions before today. When you look at the pound, which is also one of the biggest currencies out there, there was really not very much volatility in the pound at all.
Right.
You know.
Right.
So, and the Swiss strength also kind of shows me that the strength in the Swiss is returning, you know, so I think we're going to see a divergence, you know, but like I said, I think we had found good support in the euro US dollar. Whether it can maintain any type of rally, you know, like that's significant, I don't think so, but I think the volatility we have now, if that stays, well, that changes things. You know, I mean, we saw more. You guys have been trading for a long time. I mean, the currencies on Thursday and Friday, especially Friday afternoon, the last few hours, it was trading like the S&Ps in a fast market. It was crazy with the range and how fast it was moving.
Right.
You know.
Yeah, going into these weekends, for currencies, right, for gold is always dangerous, man, you know, because
right.
the market is looking like 2 days, folks, and 48 hours in this market here, but might as well be like 5 weeks. It's like crazy.
Sure. And here's another thing, too. We are going to be coming into earnings season soon, and these earnings aren't going to be reflective of this virus until 6 months from now. The earnings right now, all the economic numbers are coming out great.
No doubt.
You know?
Folks, you can reach Teddy every trading day. Forex-trading-unlocked.com. Teddy, you have a great one, safe one. We look forward to speaking to you next Wednesday.
Absolutely, guys. Thanks a lot. We'll see you next week.
Thank you. Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 488, NASDAQ up 130, S&P's up 50. So listen to this, Tom. This is pretty heavy, folks. Okay, so you got the, we knew that one person was, 2 people were sick in New York, but just came across the tape here. So the attorney was sick, 3 family members got the virus, and the poor guy that drove him to the hospital has the virus now, okay? And that's the first part. The second part is kind of more intense of this article, and what it is, folks, is that You have all these folks. What do you call it, Tom, when you go overseas and you go to school?
Expats or international exchange students?
Yeah, exchange students. So they're bringing back exchange students right now from all the big universities are bringing them back.
Sure.
But listen to this. This is what's pretty intense. As they bring them back, okay, so this one's about New York University and bringing 300 back from China, Italy, Japan. They're going to put them in quarantine, but guess where they're going to be in quarantine?
Uh-oh.
In their dormitories.
Oh, jeez.
Okay, can you picture you at Villanova, right? You're 20 years old, inside your dormitory. I mean, really? You know, at 20 years old, folks, they couldn't have tied me down inside a dormitory, okay? There's no way. I mean, you know, you'd stay there, what, for a day or so? And then, you know, you're going to go
Very difficult, to say the least. I think we can all understand that for sure. The only counter to that would be, thank goodness you live in such an online social world that you're not exactly cut off from the world in that capacity, like you might have been in your time, even my time.
Oh, for sure. Right, for sure.
But still, I shared communal bathrooms when I was in a dorm,
Sure.
so I guess that's out the window, right? I guess every dorm room now has their own bathroom. I don't think that's the case. So how does that play out?
I don't think that's the case.
Yeah.
Stay right there, folks. We got Think or Swim coming up next. Then Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.